Anand.
We've kicked off our special series called the Unicorn Health Check, and this with the aim to create a report card of our most valued startups, delving deep into what is working and what is not. So today in that ongoing series, we're going to look at India's D2C startups. Aishwarya Anand is here with a roundup.
India has the third largest retail market in the world and is projected to be at $1.9 trillion by 2030. It is anticipated that the D2C market will undergo substantial expansion in the next 5 years, given the current e-commerce penetration rate of 8%. And increasing internet penetration in India that is expected to cross China by 2030 is further fueling the e-retail boom. As a result, consumer spending is expected to hit $6 trillion by 2030. So who is spending? A large and growing middle class and 40% of the country's urban population are the key demographic drivers of this consumption story. Which brings us to the opportunity. India's D2C sector is set to grow into a $60 billion industry by FY27. Personal care, apparel and footwear and grocery and gourmet are the most attractive D2C categories. With over 800 brands in this space with an estimated revenue of Rs 14,000 crore, the D2C sector has garnered over $2 billion in funding between 2015 and 2021. So, let's assess the financial health of the billion-dollar startups operating in this space. Licious became the first unicorn from the D2C food tech space in October 2021. The Temasek-backed company claims to have grown 300% in the past 6 years and is currently valued at $1.3 billion. The firm's net loss more than doubled to Rs 856 crore in FY 2022, even as advertising spend and other expenses shot up. While operating revenue rose 1.6x to Rs 683 crore, the growth was lower compared to the previous years. The company is now targeting a 50% jump in revenue run rate by the end of the financial year 2023. Rebel Foods, which operates over 450 cloud kitchens in India and other international markets, has so far raised $500 million and is valued at about $1.4 billion. The homegrown startup recently acquired the master franchisee license for global fast food chain Wendy's in India. The company, which turned a unicorn in October 2021, saw its losses balloon 55% in FY 2022 on the back of increasing expenses, which jumped 86% to Rs 1,429 crore. However, it saw its operating revenue more than double to Rs 859 crore. The firm even laid off 2% of its workforce to prioritize its future goals, which includes investing $150 million to acquire and scale food brands. Now, coming to the other unicorn in this space, the Goodlam Group has emerged as the poster boy in content-cum-commerce play. If this wasn't evident from its unicorn status and 13 acquisitions it had made in the past 2 years, the firm is now looking to raise a new round at a valuation of $2 billion to consider more buyouts. While the impact of these acquisitions and fundraise will be analyzed after the company files its FY 2022 results, its growth has been underwhelming during FY 21. The company reported a loss of Rs 44 crore in FY 21. On a unit level, the firm has spent Rs 1.85 to make a single unit of operating revenue. D2C e-commerce unicorn Mamaearth, which filed its draft papers for an IPO last year, has been profitable in the first 6 months of FY 23. According to the documents filed with SEBI, Mamaearth recorded a restated profit of close to Rs 4 crore, revenue from operations stood at Rs 723 crore, and it is also important to note that Mamaearth turned profitable in FY 2022, recording a profit of Rs 20 crore. Purple entered the Unicorn Club last year and competes with the likes of Sugar Cosmetics, Mamaearth and Plum. It has raised over $100 million in FY 2022 and also acquired the Indian business of Faces Canada. The company's net loss almost quadrupled to Rs 204 crore in FY 22 from Rs 52 crore in FY 21. This is due to a sharp rise in its advertising expenses. The operating revenue rose 1.7 times to Rs 220 crore. Purple is also burning cash heavily as it spends Rs 2 to earn a rupee of revenue. Well, that's where the D2C sector stands at the moment. Going forward, omni-channel expansion, personalization at scale, sustainability and global thinking will gain significant momentum in the D2C space.
Okay, with that, it's a wrap on this edition of Startup Street. So it's a goodbye from all of us, but stay with CNBC-TV18. The news and updates continue.